what you want to do at this particular point, you want to be in the hard asset market. Obviously, gold and silver have done tremendously well. Diamonds have done nothing but go up in price since we've recommended them, but now the biggest price moves are coming. I would always recommend to my clients, if you're going to buy yellow flawless diamonds, is to put them away for retirement. It's a 10-year hold type of thing, because these diamonds go up 25% a year, and they double every 4 years in price. Means that if you buy a diamond for $20,000, in 4 years it's going to be worth $40,000, and then it's going to be worth $80,000. And I remember when I first started recommending diamonds back in around 1980, and my clients were saying, well, who's going to buy this diamond from me when it doubles or triples in price? Well, the funny thing is, back in 1980, you could buy the yellow flawless diamond, a 1-carat yellow flawless, for $500. Now they're $16,000, $18,000, and $20,000, and you can barely get them. The fact is that there's such a demand for this, and as far as yellow flawless goes, that's my market. My cutter cuts 80% of the world's flawless diamonds, and those only go to my Canadian clients. So right now, my clients own these yellow flawless diamonds put away in safety deposit boxes in Canada, and we're just sitting back waiting as inflation continues to rise. These diamonds are going up 35% this year in September, and again, we will see. Back in 1979 and 80, when these markets really took off and went up 500% in 2 years, they basically went up every single quarter, and now we're starting to see similar situations like that again. So again, this is a very exciting time. As confusing and as dangerous as the world markets are at this point, if you're in gold, silver, and diamonds, we're breezing through this thing. We're sitting here and we're watching inflation going up and watching the price of our hard assets continue to climb. While you can still get them, the reason that yellow flawless diamonds are going up by 35% this year is primarily because the miners, and this is the first time I've seen this, that the miners are raising the prices because they have fixed costs. They run the mines, and basically there's so few diamonds coming out of the mine of this quality and this caliber that, again, the prices just got to keep on going up and up and up because they still have to run the mines, but the bottom line is that they're not pulling out enough money in order to make it profitable. So that's why you're going to see a 35% increase in September in the price of yellow flawless diamonds. While you can still get them, I very strongly recommend you invest in the yellow flawless. We have some of the most beautiful diamonds you've ever seen, and again, these diamonds are one of the best hedges against inflation and against currency problems, because this is the only asset that could be sold in another currency. It's also portable and private. 10 years ago, may not have been an issue. But now, with the state of the world economies and the governments and everything going under, look what's happening in Europe with the sovereign debts and all these countries going under, who knows what the use of this diamond could be? You may have to use it to get across a border. The bottom line is it's one of the most important assets you could ever own. We do have some flawless yellow diamonds. In fact, we don't even put them hardly on the website because they sell that quickly. And we're converting our entire website to video, which will be done this month. And when you see the videos of these amazing diamonds, you'll understand why you want to own them. If you're sitting in the stock market right now, you should be very, very concerned. The chances are we could see a major drop in October. That's one of the worst months for the stock market. My feeling is going into the first quarter of next year, we're going to see very, very dangerous markets. My suggestion is to get out of stocks at this point and take the risk off the table. Put some of that money, just keep it in cash because you're going to need it, and take some money and buy yourself a diamond. It's one of the best investments you could ever make. And again, we're the only company that can resell the diamond for you. I've spent over $200,000 building my auction site, which is coming out in October, and that is for my clients to resell their diamonds. You want to own yellow flawless diamonds while you still can. They're very, very difficult to get. And again, I've got some of the most beautiful diamonds starting at around $20,000 and going up from there. A $20,000 diamond over the next 5 years, if I'm right, will be a $100,000 diamond, and that's a 500% return on your invested dollar. The other situation that you really want to look at, which is one of the biggest returns you'll ever see, is in Argyle pink diamonds. Argyle pink diamonds are the most beautiful diamonds, in my opinion, and 95% of the diamonds come from one mine. It's in Australia, and it's called the Argyle Mine. Now, they produce these beautiful, gorgeous pink diamonds, which are in tremendous demand. What's happening at this particular point is that the mine is going to close. And the mine is going to close, and there goes 95% of the world's pink diamonds. Why is that important? Well, let's look at it this way. When Picasso was alive and you bought one of his paintings, you could buy a painting from Picasso for a reasonable price. Once he died, those prices went up 10, 20, 50, 100 times. Same thing is happening with pink diamonds. Once that mine closes down, you're not going to be able to get them, and the prices just go absolutely ballistic. I'm very, very heavily recommending, while we can get them, Argyle pink diamonds. They are sensational. They're beautiful diamonds, but they're small, and what we do with them, we set them in the most beautiful jewelry that you could ever imagine, and it increases the value of the diamond substantially. We believe that clients that buy Argyle pink diamonds now in these price ranges will see within the next 10 years, when the mine closes down before 2018, give it 2 years for the diamonds to run out, a diamond you could buy today for $30,000 will be $300,000. A diamond you could buy for $50,000 will be $500,000. We saw this before, and we're seeing it happen again. In actual fact, we're seeing very few diamonds coming out of the mine. The amount of diamonds coming out of the mine are dropping tremendously, and that sort of tells me that the mine is not going to stay open until 2018. It may only stay open until 2015 or 16. We may only have to stay in this market for 4 or 5 years and then give it 2 years for these pink diamonds to run out. And let me explain what could possibly happen. The Cullinan mine in South Africa produces some of the most beautiful blue diamonds in the world. That's where these magnificent, vivid blue diamonds came from. They're very, very rare. Very few of them come out of the mine. In fact, they say at auction that 100 Picassos will sell before one blue diamond is sold. That's how rare blue diamonds were. Well, in 2005, when this mine closed, we saw vivid blue diamonds selling for $200,000. That was in 2005. Let's fast forward to 2008. The financial world is falling apart. Lehman just went under and almost brought the whole financial system down with it. The stock markets around the world are plummeting. People don't know what to do. All of a sudden, an auction happens, and a vivid blue diamond sold for $1.4 million, 700% higher than where it was 3 years ago when the mine closed down. Now, vivid blue diamonds of high quality that are flawless are going for $2 million a carat. So the fact is that these diamonds continuously go up in price, and we're concentrating on the ones that are the rarest and are running out. That's the yellow flawlesses you can get involved in starting at around $20,000, and you can actually get involved in Argyle pinks. Listen to this. I've got maybe 3 or 4 diamonds that are so spectacular, and they come in our Argyle Dream Collection jewelry. And you can get involved for about $30,000 in an Argyle pink, and again, 10 years from now, that diamond could be worth $300,000. Along with the fact, putting a beautiful diamond like this on your wife or girlfriend's finger is a wonderful thing. So again, during these extremely difficult times, and it couldn't be much more difficult than what we're looking at this particular point, you definitely want to get out of stocks, out of paper assets, keep some of that money in cash, make sure you're in gold and silver, and do yourself a very strong financial favor and buy yourself a diamond. A yellow flawless or an Argyle pink will get you where you want to go financially and protects you against the onslaught of inflation that's just around the corner.
It was interesting. There's a new TV show on Fox. It's called Buried Treasure with the Kino brothers. And they go into people's homes and find amazing pieces of artwork and try and help these people out financially. They went into somebody's home. It was actually a guy whose brother had passed away. And they found what they thought was a diamond. And it turned out it was not a diamond. They were all excited. They thought they had something worth $80,000. So quality does matter. And that's why when it comes to quality, you want to deal with Harold Siegel and rarecoloreddiamonds.com. Harold has the top diamonds from the top cutters in the world, the best collections. He is the person to deal with when it comes to rare colored diamonds, natural fancy colored diamonds. He is the go-to guy. He's proved that over the last 5 years. RareColoredDiamonds.com is the website. The telephone number, if you'd like to connect with Harold, 1-800-432-1022, 1-800-432-1022, the website, RareColoredDiamonds.com. And if you have any questions, want to talk about your personal financial situation, I know that Harold will be more than happy to speak with you and obviously help educate you as to the possibilities of investing in hard assets. to invest in precious metals. There's only one company that Harold recommends. That is Worldwide Precious Metals. Their website, www.pmc.com. The telephone number, 1-866-623-2002, 1-866-623-2002. You can get our free weekly newsletter from Harold or from Worldwide. They'll be happy to send it out to you via email. In our newsletter this week, we have our charts of the week. We have some great charts on the jobs problems in the United States. Also, quotes and quick hits, information on diamonds, gold, silver, the sovereign debt crisis, U.S. debt and deficit problems, currency wars, as Harold touched on earlier, the job situation with a frightening jobs chart. Also, the banking industry, more banks are closed in the United States. The stock market, a lot of people concerned about the stock market, and also the real estate market. We keep track of that. And here's something to think about. We haven't really talked about the real estate market in a while, Harold, but the U.S. housing crisis is now worse than the Great Depression. It's official. The housing crisis that began in 2006 has recently entered a double dip and is now worse than the Great Depression. Prices have fallen some 33% since the market began its collapse, greater than the 31% fall that began in the late 20s and culminated in the early 30s, according to Case Shiller. The average loan in foreclosure, if you can believe this, has been delinquent for a record 599 days. Great story we found this week. The last resort. More and more Americans are calling long-stay motels homes. And even around the world, there are concerns. The London property bubble may be about to burst. In fact, they're actually saying that there's a number of distressed sellers in the capital of London, over in the UK, and they're actually in a position where they may be forced to sell, and you could have a bubble that is about to burst in London. It is very, very serious. Get our newsletter this week. Get our information. You can get it from Worldwide, 1-866-623-2002, or Harold, 1-800-432-1022. One of the stories on the precious metal side of things that we don't really have a lot of time to go through, it's very, very long, but it is a must-read, and that is Jeff Clark. How much upside is really left in gold and silver? If you want that answered for yourself, get our newsletter this week because they go through the numbers, and I think you're going to be very, very surprised. Mark Faber came out this week and said that, no, gold, it's not in a bubble. People talk about gold being in a bubble. He says central banks keep printing money. Gold's rally above $1,900 an ounce shows no signs of a bubble as central bankers continue to boost money supply that has helped spur bullion to a record. He says, I don't think that gold is in a bubble. He's the publisher of the Gloom, Boom, and Doom report. He said in an interview in Thailand, when you buy gold, it's insurance against systemic failure and problems in the financial markets. He said, he says he actually buys a little bit of gold every month. And he was interviewed by King World News, and he said, this financial disaster is going to end in a disaster, and you must own gold. One of the stories that really caught my attention this week, and this is no surprise, GATA, the Gold Antitrust Action Committee, has said for a long time that Western central banks have been manipulating gold. Well, WikiLeaks came out and released more documents, and GATA released a flash. China knows about gold price suppression. The U.S. knows, China knows. China knows that the U.S. government and its allies in Western Europe strive to suppress the price of gold. And the U.S. government knows that China's knows, according to a 2009 cable from the U.S. Embassy in Beijing to the State Department in Washington. We have a group of stories on that issue. Harold, even though that there have been forces trying to keep a clamp on gold, we've come from 250 all the way to 1900, and the truth of the matter is they can't hold it back any longer. They're in serious, serious trouble, and precious metals going a lot higher in the future.
Oh, you bet. In fact, I'm very comfortable with it. I don't have any problems with the way the market is trading at this particular point. Again, I've been through these before, and I've seen these type of moves happen, and again, it all makes sense. The bottom line is that you just got to keep your eye focused on the prize, and the prize is inflation. There's no doubt that when commodities go higher and people are not making as much money, their dollar doesn't go as far, and as long as we have inflation and a weak U.S. dollar, we have got to see metals go higher. So again, as far as these bubbles go, the general public isn't involved in gold. They're not involved in silver in most cases. It's not mass hysteria where every day they're talking like they did in 1980, how much gold did you buy, how much silver did you buy? That's not happening. It's mostly the hedge funds that are buying the gold and silver markets, and they're buying it for the right reason. And they're the ones that have all the money and they're pushing it up. Again, for us, we've been on this ride for 10 years now. A lot of us have bought silver 10 years ago when it was at $4